if I was to look at the cap rate trend in the United States over the last 10 years, okay, that trend just looks like a downward sloping line. At no point does that line, its downward slope, sharpen or become more shallow. It's just a consistent from 2011 to 2021, a downward slope. And then in 2021, it falls off a cliff, right? Currently, cap rates are declining at the fastest rate in history. Let's say, ignore that last part that I just said. Just look at this slope. It's 10 years. It's very consistent downward slope, right? Now, let's talk about what happened in the middle of that slope. From December 2015 to December 2018, a 3-year time frame, the Federal Reserve raised rates 9 times. The Fed funds rate went from 0.25 to 2.50. That's 9 increases. Please show me any point in that 3-year time frame when that curve downwards for cap rates even became shallower. I tell you, it's not there, because I've shown it to people in large conferences and everyone's shocked. So when people say cap rates will go up because of interest rates, they go up, that's not a data-driven statement. That simply is wrong. Here's the right statement. There is a significant correlation between increase in interest rates and increase in cap rates. Here's the second statement that's true. There are many reasons why cap rates go down or go up. Population growth, job growth, income growth, interest from institutional investors, the returns from other asset classes besides real estate all have significant impact on cap rates. And here's the third statement. There is no evidence, statistical evidence, that in the last 10 years, interest rate hikes have had anything to do with cap rates at all. So I'm not saying that there was no impact. I'm saying that there were other factors that were statistically so much more significant that you simply couldn't see the impact of 9 interest rate hikes on decline in cap rates. In the next 2 years, the Fed is likely to raise rates. And you are right. It's very likely that interest rate hikes will happen at this point in time, given how fast inflation is running. I think there's 2 hikes coming in 2022, 2 hikes in 2023. Some people think 3 altogether. I think it's 4 altogether. We've done 9. And we couldn't even affect the slope. Do you think 4 are all of a sudden going to affect the slope, shallow it out, and start making it go upwards? In the middle of the largest liquidity event in modern history, when $15.5 trillion were pumped into the world economy, the last time we pumped $4 trillion into the world economy, it resulted in a 10-year boom. This time we pumped in 3 times as much on an economy that's only 20% larger than it was 10 years ago. We plugged in 3x the liquidity, but we're expecting that the boom will only last 1 year? I mean, how is this data driven? These things take a long time. It takes a massive amount of time for $15 trillion to get into the economy. And everyone that says, oh, no, that's liquidity that the Fed will withdraw, I'd like to prove to you that the Fed will not. In 9 years, the Fed withdrew $360 billion out of the $4 trillion that they pumped into the economy. In 9 years, they didn't get to the 10% mark. Check my facts. These are public numbers. So they withdrew 9% of the liquidity that they injected in 9 years. Yes. It would have taken them 100 years to remove it. Today, there's not even the possibility of that, because the economy, the world economy and the US economy, we're crack addicts, right? We're addicted to liquidity. The slightest change in liquidity has astonishing, knock-on effects into the economy. So really is no chance that a significant portion of this money is going to get removed from the economy. What the Fed is likely to do, what it will do, is it'll stop adding more stimulus. Right now, they're buying $120 billion of bonds. They're going to cut that down. It'll go to 60, then it'll go to 40, then it'll go to 20. One day it'll be 0. So they won't throw more crack at us. But the crack that's already in the system is 10 years worth of crack for a $68 trillion world economy.